Hello traders, this is Orlando for Snipe the Trade, and today we are going to review the pound. We are going to see what the pound can do for the next week because, well, today the market just opened on June the 5th, 2016, and it was a very, very bad open for the pound. And this is made, well, I'm going to show you first of all the open the pound had. As you can see, the market opened with a gap of about let's see about 55 pips, and then after the open, the pound dropped about 110 pips to its lows, and it keeps dropping. All right, and this is mainly due to the Brexit, and most of you know that the Brexit is well, the issue about Britain exiting the European Union or not. And as you can see, another poll puts remain at 41% and leave at 45%. And if the pound leaves the European, well, if Britain leaves the European Union, the pound is going to get a lot of bearish pressure and is going to drop enormously. And this is what happens just with one poll, a 55 pip gap, and then a 110 pip dip on a Sunday, which is huge. Now let's go back and let's see what the pound has been doing on the exchange against the dollar. Well, we were kind of in an up move, and but since March, since the end of February, we have been, well, inside of this big range. You can see that we have actually tested the range once here, twice here, and three times over here. Now this is the 47.10 area, the 47 to 47.30 area, if I say, and this has been a very strong area of resistance, and this is the area that the pound needs to break in order for it to move forward and maybe go into the 48s or 49s. Now, if you can see right here, this is the daily chart of the pound, and well, this is where the pound has tested the 47 area. Okay, now if the pound could actually break with the 47, we could be looking at a higher uh, 49 or at the mid 49s for the first test of a new resistance. But because of the Brexit polls and the Brexit decision nearby, I clearly don't know if that is going to happen. On the other hand, we do have this big area of support, right, where the pound actually found buyers, all right, when the market opened. And if you look at the order book, I don't have the order book right now. Well, let me look at the order book. Let me look for the order book for you. And right here we have one that's order book. And remember that the Forex is not a centralized market, so we can't have a centralized order book. We have to go with the each broker's order book, but by looking at it, you get the idea of where the orders are placed. And as you can see here, we have an imbalance between buyers and sellers. And this is the non-cumulative, but if we go to the net position, you can see that we have well, the buyers are actually holding larger positions around the 43 level, which means that if we go back to the chart, this is exactly where uh, we started to get some buyers. But that 43 level, let's go back to the order book, right? That 43 level, well, is still a good 39, 40 pips away. So we might see some selling. And right here, we do have some big sell orders around the 43.20 level, which means that if we go back to the chart, the 43.20 level, the sell orders are placed right below this low. So if price breaks with this low, you're going to find a lot of selling that might not be stoppable with the buy orders at the 43 level. So this is the order book, under the net positions or open orders. The open positions are net short right now. As you can see, we do not have a lot of long position opens. So basically, we are assuming that price actually could break or will break this area of support after breaking this nice well, up channel that we were trading in, okay? Now, what areas are we going to be looking at? Remember that this is the 50 Fibonacci level between the low and the high of the move. We have the 61.8, but I think that if we look closely, we could actually be testing these areas right here. Okay, this is where we are really going to find some buyers and where we really should be focusing on a relief rally after a very, very bad Monday if I'm able to assume. So basically this is the area that I'm looking at for maybe some buys, so some relief rallies, okay? But I'm not sure that I'm going to be playing too much on the long term with the pound, with the Brexit coming, and basically I'm just going to wait to see the reaction to these levels. Let's see, the 88.6 must be around these levels, all right? And well, the 88.60 is all the way down, maybe the 76.4 should be on the upper side, right? This is the 76.4, the 88.6. So basically, these are the fib levels that I'm looking at, the levels that I'm waiting for the pound to react to. And basically, I'm just not playing the break of this support level or even the bounce of this support level. I'm just going to see how this plays out and pay close attention to the 41.64 level. We are actually 210 pips away, but we don't know what can happen with the pound at these moments. And if you are trading the pound, be very careful and don't leave your positions open without a stop loss. Now let's look at the Euro GBP. This is last week's analysis on the Euro GBP. As you can see, we were very nicely uh, trading inside a down pitchfork, okay, which was tested very nicely a couple of times. Then the median line was tested nicely also a couple of times. And we actually went short when we hit these levels right here. Sadly, our position got stopped out at break even when we were in the money for about 45 pips or so. But I mean, with the technicals on this position were very good. Not only we were testing these zones of previously tested the support now resistance, but we were also testing some previous weekly highs or something like that. I can't remember exactly, but we were testing some very nice levels. But because of the Brexit, we decided, but even though because of the Brexit, we decided to go short and keep our risk tight. And we when we could and when we were about 40 pips in the money, we actually put our stops to break. Actually, it was less than that. We were 25 pips in the money when we decided to put our stops to break even, and that was a very good choice because price just rallied at the end of the week. And as you can see, the last 3 4 hour bars on last week were enormous, and they actually moved 100 pips price up. So basically right now we are testing these areas. Well, this is a very good area of supply. As you can see, we have a lot of churn going on in this zone. But again, I'm not going to be playing a short um, position on the Euro GBP because I think that the pound is going to get a lot more weaker. What I'm going to wait for maybe is a small rally and a retest of these zones. And basically the bigger zone that I'm looking at for a buy opportunity is this area right here, the 78.65 zone because of how much it has been tested in the past, and not only that, but I mean, we need at least a test of these highs, which means that a 64 rally for a nice dip. And if we do have that rally, just let's assume that we are going to be testing these highs, guys. And let's grab a Fibonacci. This is an assumed Fibonacci, right? Uh, we are going to use the default Fibonacci levels, okay? So let's assume that we are going to test these highs and we are going to get that retracement. This is only a 38.2 retracement the start, from the bottom to the top of the last leg up, right? We could be looking at an even deeper retracement around the 78.10 area, which would give us a perfect 61.8 entry and a retest of this zone right here. So basically, what I'm saying is that I do like the idea of a 38.2 retracement if we test the 79.49 zone, but I like even further the idea of a deeper retracement for a better risk to reward scenario and a trade with a higher probability of succeed. So basically, this is what the pound has for us this week, and these are the levels that we are looking at. And as a reminder, be careful with the pound because you don't know what announcement can be made about the Brexit, which will bring a lot of volume and a lot of illiquidity, which means that your stops might not get filled, which means that you can be looking at a very substantial loss. So be careful with the bound this week and have a great trading week.